Let's talk about all of this with your leadoff guest and panel, Lindsey Bell of Clearnomics here on set, Gilbert Garcia of Garcia, Hamilton and Associates, focusing more on the bond market. Lindsey, you are here. Any words of comfort or advice to your clients and our viewers right now?
Well, I think you put it nicely. Days like this are super uncomfortable, but they're not completely uncommon. And usually days like this create more noise than signal. And I think that's what the market is trying to find. Look, we saw the tariffs. They were broader in scope. They were deeper than we expected. And so the market is reacting to that. But I think cooler heads can prevail over time as we learn more information. This is the changes in trade policy. This is a process. It's a process that kicked off on Inauguration Day when Donald Trump when he signed into the America First trade policy. And so I think we're going to hear about negotiations over the next several weeks. Yeah. And as we get more information, clarity will come. Or,
by the way, and I don't think anybody else is talking about this, the potential legality. If the GOP challenges these tariffs in court, a judge could invalidate them. It's a small chance, but it's being talked about. Quickly go back to you, Lindsey. I guess there's two ways to look at it, right? Which is today we're all kind of shocked by what we heard from the president. I mean, there's tariffs. I think Steve Leisman pointed this out to you. There's tariffs on nations that don't even exist. Or there's islands that have no people, more sheep than humans that now have tariffs. That aside, we either look at today as the reaction to sort of the sound and fury yesterday, or these tariffs are just the start of a global recession where markets have to fall another 10 or 20% because the damage hasn't even been started yet.
Yeah, I mean, it's TBD, right? We're in wait-and-see mode, and I think in the short term...
That's scary. TBD on that is scary.
TBD is scary, but I think in the short term you have to accept that there's going to be continued volatility. And, like you opened the segment, you said it's times like these that can create opportunity. It doesn't mean we're putting a bottom in today. And like you said, like we both talked about, it's going to take time to figure this out. But I think when you think about the grander scheme, this takes time. Tariffs... Companies take time to determine how they're going to react, change potential operations. We saw in 2018 the market had a very negative, immediate impact to tariffs that went into place. Granted, they were not in the same size and scope that we're talking about today, but we did see a rebound in 2019, so the market sold off in reaction to what would actually turn into a downturn in earnings growth in 2019. So the market's getting ahead of this is what is happening here.
Gilbert, is the 10-year going to 3%?
It is going to break 3% much sooner than we think, probably by tomorrow. It's going to break through the 4 handle. My view is a little bit different, if you don't mind, which is I think this was inevitable. I think that there's been chaos going on in Washington now for the last couple of months. I think already we've been seeing consumer confidence roll over. I think we've already seen money supply kind of languish at kind of low levels. And I think this was inevitable. And I believe we're going to look back in time at this era, and we're going to call it something like the way we look at COVID, the way we look at the S&L crisis for people as old as I am, the way we look at long-term capital. And we're going to look back and say, those were the trade wars. And I think it's just the beginning. And I think what you see today is just a buildup of essentially correcting the overvaluation that has existed for the last really 2 years. If you go back to the beginning of this year, and whether you looked at data for 25, 50, 75 years, no matter what metric of valuation, stocks have been essentially in the 95th to 100 percentile of data. And so in our view, this was inevitable. And in my view also, I think the Fed should really step up. This is the time for real leadership to say, we're going to stabilize the markets and let's do an emergency cut.
But Gilbert,
go ahead.
You're calling for an emergency cut in the breath after saying that stocks have been overvalued for 2 years.
That's correct. I think, though, it's about an emergency cut would just stabilize the fall. Because if you let it continue to fall, and if you wait for the normal cadence of what they're looking to do, I think it'll be too late.
But let me rephrase the question this way, and I love this back and forth.
Yes.
Because the question is, are stocks falling because they were overvalued, as you kind of hinted before, or are stocks falling because we're going into a recession, which is what you're warning the Fed needs to get ahead of?
We're going to go into a recession. Stocks are falling right now because they already should have been falling because of the valuations. Now I believe people are recognizing we're probably going to start slowing down, that this is not good. It is essentially a worldwide tax, and it's going to lead to a much slower economy everywhere. And I believe it's going to lead to a recession.